I'd like to welcome you to our August 19th market update. We have a lot of material that we wish to cover. This will not be the same as what we've done in May or at the end of the year, which you should review. It's just new material and update information. Basically, we're going to try to give 4 answers. Will October and September markets be bad? Our current gold and silver price forecasts. A little bit about financial astrology, but not so much in this one. And some best stock ideas. A few things additional to what we've given you before. We also have, if you notice, 6 sponsors, and all of which we think are interesting, and you should investigate to see if they're appropriate for your portfolio. Disclaimer, of course, you have to do your own due diligence and don't buy or sell just because I say so. But you can make it one of your considerations. The 3 big questions for today and in the summer is the market tap in or near? Secondarily, if it is, will we see a 10%, 15%, 20%, or even a retest of the May 30th and or spring lows? And finally, when will this be? Will it be September and October, or even end of August, or the winter? So that's what we want to address. The general zeitgeist we've had has been uncertainty and fear. It's lessening a little bit for astrological reasons, but will come back again big time in the winter. So regardless of what markets do, whether or not they're range-bound, whether or not they're late cycle melt-up, or if it's a crash, there are 3 pieces of advice we have that are extremely important, we feel. Number 1, buying the dips and selling the rallies. Of course, that will work better if markets are on the downtrend. Number 2, long-short pair trading, because clearly that will cover you if you choose wisely or use an appropriate hedge. And to remember that everything that's being done behind the scenes is for November 2026. So we think that a correction, possibly as soon as this month, but certainly September, October is possible. A correction is 10% plus. But if not, it's highly likely 80 to 90% plus by the winter if we don't have it beforehand. So again, uncertainty and fear, which are not as strong as they were a little bit before. 3 pieces of advice, regardless of what markets do: buying the dips, selling the rallies, long-short pair trading, invest for November 2026. It's a mixed picture, which means trader's paradise. That's because of bonds, tariffs, and economy. I could give you 20 facts positive, 20 facts minus, but I'll give you 3 additional ones to think about on both sides. The first is the economy and the labor is weak, not strong. Parts of it are strong, parts of it are weak. This most likely will give us lower interest rates, which is a positive. Companies have record buybacks, almost $1 trillion at the moment, and the tariffs are not as bad as feared. All that's positive. On the negative side, we have economic uncertainty. We have a declining LEI, leading indicators, and we certainly have elevated valuations. So that's a mixed picture. Some days the markets are going to be up. Some day it's going to be down. Which way is the trend? This is not a environment to be a hero in. We agree. Markets have done very well. We did a sell in May and go away. Not necessarily the most profitable, but it did not lose money, as we'll show you. So bonds, we maintain, is from 0 to 3 rate cuts because the inflation outlook is mixed. We have weak global economy with discounting, dynamic pricing, and with tariff crises on and off. Most companies, not all, have declining profits. Most important is labor weakness that they're going to be paying attention to, that is, the Fed will be paying attention to over the next several months. 5 reasons. AI, taking jobs. Robotics, taking jobs. Doge, eliminating jobs. Labor inflation, and a slow economy. All of those suggest labor weakness. Now, it's not outrageous. We're not talking depression. We are talking recession-like. So we still maintain there's a 50% probability of Fed action, and that's for 25 bips. Otherwise, most likely it would be October. But regardless, even if it's zero, there will be two at least before the spring of 2026. So that gives us a bond range. Currently, we're in the trading in the proper range, 425 to 450. Bonds, tariffs. Short term, there will be costs and pain. It's ridiculous to say there's no cost to this. On the other hand, from an intermediate and long-term basis for the United States, this is very positive, most of it. Onshoring U.S. manufacturing and jobs is very positive. So what we've had, to some extent, is stagflation. And by the way, we would have that regardless if there were tariffs or no tariffs. We have worries of inflation and tariffs. That will be changing to, next year, worries of deflation and potentially stagnation, which we will see winter 2026, regardless of what anybody does. And if you notice with tariff liberation, we talked about it before, it would be very difficult, it would be successful, but constantly changeable and unexpected, many surprises. Certainly no surprise that that was the case. Okay, we said selling may go away, which we didn't last year, either by the second half or hedge. Well, we mostly hedged and traded, so we came out all right, but one could have just bought and held. We only gave one from our yellow alert, which was still on, by the way, so the markets can come down Friday or in September, October, so we're still on yellow alert. The only time we elevated to was just before the market seriously dropped 600 points, but then the next day, that is to say Monday, it went right back up. So a very good trade, and like always, we take half profits and hold. But we were fighting. What were we fighting? There are three fights. One is to fight the Fed. I do that periodically. One can win that, but it's not always the best fight. The cosmos, when you fight that, you almost always lose. But then fighting Donald. Generally speaking, we make money going with him rather than against him. As you saw, for example, with when copper, great copper short, above $5. And why is it a problem? Because Trump is so pro-stock market. Not that all presidents don't want the markets to go up, but this one, he measures himself by that. And at the moment, he's up. If you look at the numbers, he's comfortably up from November 4th, December 31st, and January 20th. So as far as the stock market's concerned, he's doing okay. But I'm not really concerned about this stock market. I'm concerned about the stock market in the second half of 2026, and that's what's going to happen. And we're not going to just continue going up and up and up with no correction. Ain't going to happen. If it doesn't, it could be a short and shallow September, October, or August, but it will be then in the winter. Technical analysis, if you notice, from the 50-day moving average and 200-day, if you're basically a trader or investor, you're not worried at the moment, at least until we get to those numbers. And we're not there yet. So at the moment, if you're long, it's a comfortable place for the big money. And however, if you look at the markets, they're significantly overvalued. If we were a computer and walked away, we would expect to have a return of nothing from next year. That is to say, whether the markets go up or down in the next 6 months, we will see them neutral or lower a year from now. Very important point. That's fundamentals. But fundamentals don't matter till they do. And here's a list of our fundamentals. And obviously, when markets are above it, we're a little concerned. When we're long, when they're below it, we may want to buy, or reverse if we're short. The ones that I think you'll find, actually all these you'll find different. Our gold numbers, which we'll give in some detail, are lower than where the market is. Our silver is lower than where the market is because we're expecting a global recession-like scenario. Copper also, which is sort of bullish, but there's a tremendous divergence between the global copper market in London and the U.S. copper market. Great trades, great arbitration. Oil, is going to stay mostly down. And remember, there are three things that must happen next year. Eggs must be down, and gasoline must be down, and bonds must be down. And they will all be that case by November 2026. And again, my valuation of the S&P and NASDAQ is far lower than where we are at the moment. Gold fair value, basically it's trading as a crisis. Trading as a crisis, I believe these crises will be reduced. I think not only the situation in the Ukraine, but elsewhere in the world. And if they do, gold will drop. Additionally, if I'm wrong, or when gold goes up, gold stocks and silver stocks, vastly, good ones, vastly outperform the physical gold and silver. We'll discuss that in some detail. But basically gold is, but if you notice at the beginning of the year it was 2280. So effectively it's moved up comfortably. Silver again is overvalued in our view. We went short at 39 and change. Its valuation, depending on you're treating it as an investment or commodity, is about 28 or somewhere between 26 and 30. Because if I'm correct about a global economic slowdown, then silver, on the short-term basis, will be dropping. And if I'm correct that the crises are going to be reduced globally, then gold will drop and silver will drop. Although then there will be a shift in the gold-silver ratio, which is elevated primarily because of all the buying that the central banks are doing. So there's a bunch of flips there we'll be talking about. Everybody's portfolio is different, whether you're doing it for wealth creation or wealth preservation. Some people like to trade momentum. I like to trade devalue. Basically, mine is cosmic value. I like to buy cheap, and I usually come in early, and I usually exit early. And that doesn't mean you should do the exact same thing, but it's always to note when someone's giving advice, where is it coming from? And mine is a cosmic value investor. And at the moment, under yellow alert, I'm not buying very much, mostly selling or hedging. So our view, which is different than many people in the gold and silver space at the moment, is not to buy immediately, but to slowly accumulate on weakness quality precious metal stocks. Now, if you disagree with that and you think gold and silver is going up, then I think you should be basically buying. And if you don't believe in market timing at all, you can do a dollar cost averaging. And these are primarily for producers and near producers. Once we get down to exploration, etc., it's obviously a more risky environment. So it depends on how much risk you want for how much reward. There's no such thing as no risk and for reward, although if you're doing an arbitrage, that's generally the case. But then after time, that arbitrage disappears. So what we think is the pair trade, and this is only if you need to, you don't need to do this, is to sell gold and silver and rebuy it later, of course, and to buy gold and silver stocks. Because when gold and silver goes up, they will generally outperform. We're going to show you some charts here. Our current position is to be long gold both at 3,500 and also in the futures market, 3,500. Silver, we're short at 39.69, and we were also short at 38.50, but we covered that. And our hedge was against Vizsla, which is our favorite silver stock at the moment. If you only had one silver stock, and believe me, I think you should have more, this would be the one, which is Vizsla. We'll talk about that later. So we're going to give some of our mining picks. Again, you'll see them in our May and our March and our December. You can take a look at, because it's a question of when. But even if commodity prices drop 10 to 25%, quality mining stocks sport good value. And I don't mean like when copper was $5.50 and just went to $4.80 or $4.40. No, it needs more. So these are just a list of a few things for you to look at. We'll also be giving you some elevator pitches, just 2 minutes, sometimes 3, from people that are sponsoring us, and I think you should pay attention to them. We make it short, so the ones you like, you go to their website, you put it on your trading screens. The ones you really like, you can start to invest in. But certainly worth watching. So our first one is Vizsla. And before I introduce it, look at that chart. Our theme is buy wholesale, don't buy retail. Why spend $30 when you can buy it for $10? And if you look at the chart, and we're showing you a 2-year chart, you can see a 5 times performance, outperformance with less risk. So let's hear a little bit from Vizsla. Okay, give us a moment here.
Hello, my name is Michael Connert. I am the founder and CEO of Vizsla Silver Corp. We're traded under the ticker VZLA on both the TSX and the NYSE. I want to say thank you to Henry, and I'm glad to virtually be here at the conference. And I want to talk about why invest in Vizsla Silver today. So very simply, Vizsla Silver has a very large vision of becoming the next world-class silver producer. The way that we're going to do this is by unlocking the value at our project here, the Panuco project. The Panuco project is one that we've consolidated for the very first time in modern history. This is a very high-grade, very large silver district in Sinaloa, Mexico. And what's really interesting about Vizsla is that we share a lot of characteristics of the other 3 single asset silver producers that were recently acquired in Mexico. You may be familiar with Gatos Silver, Silvercrest, and Mag Silver. In some ways, we're very similar. You know, this is a precious metals district in Mexico, as for the other 3. We're high grade. We're a large 100% owned district. We have incredible exploration upside. But where we're a little bit different from these other 3 that recently traded hands at an average of 1.8 times their net asset value is that because we're a little bit earlier in the development stage, we trade at a discount to our net asset value. Now, the company is very well funded. We have over $200 million US in the bank. And towards the end of this year and going into 2026, we're going to accomplish a number of things that will increase our net asset value multiple and bring us much closer to valuations we saw for Gatos, Silvercrest, and Mag. Now, in fact, we are similar in a lot of ways, but I believe there's characteristics about Vizsla Silver that should have us trading at a premium over these other peers. You know, we are 100% owned. We have incredible exploration upside, and we're purely precious metals, silver and gold here. As a result, I believe as we continue to do the things that we're working towards this year, which is the feasibility study, permits are on the horizon for us. We have a test mine, and we also have financing coming in the form of project finance. As we check all of those boxes, I believe our multiple re-rate, and I believe Vizsla Silver share price will be much higher than it is today. So in summary, the reason to invest in Vizsla Silver is that we're the last man standing in terms of high quality, very large silver primary producers in Mexico. And then we have a number of accretive catalysts coming up here that are going to create a lot of value for our shareholders. And thank you very much for listening.
Thank you. I want to add one more thing. If silver stays the way it is, then their ROI will be 100%. When they go into production probably in 2027. If silver drops to $22, which, by the way, I don't believe is going to happen, I think it would hold 26 to 28, then their ROI would be under 2 years. Those are incredible numbers. This represents incredible value. It's just a question when you want to potentially buy it or at least watch it and do your due diligence on it. In terms of silver, with the number of silver companies we like, we deliberately only put Vizsla here. There's several we're going to be mentioning in the next month or two. Again, since we're somewhat bearish on silver short term, we would want to wait. But we then want to buy these companies in the fall, and we'll be putting them up. But if you look at our previous one in May, you'll see some good companies. There are a lot of good silver companies there that will do well. But if it's going down, as we think, I would wait, because when it goes down, they initially go down further. And then that's the time to buy. We like the market time. If you don't like the market time, you can start adding into it, because there's less risk on a long-term basis than with many other stocks. Gold investments, we certainly like Agnico Eagle. It's done incredibly well, although I always find it expensive. It always does better. Kinross did very well when we recommended it last time. It's on a hold, though, now. It's a valuation only. When it drops down, we'll want to rebuy it. Again, that's because I like to have value when I buy. That way, in case I'm wrong on timing, which happens at times, I'm still safe on an intermediate long-term basis for an investment. Of course, if you're trading it, that's a different story. So the one we like here is DRD Gold. Now, DRD Gold, let's take a look at this 10-year chart. And you tell me, would you rather own gold, which went up 200%, or would you rather own DRD Gold, which was up 1,200%? I think the answer is pretty obvious, isn't it? And again, my thesis, buy wholesale, don't buy retail, but of course you have to buy quality stocks. Because remember, according to Mark Twain, a gold company is nothing more than a hole in the ground with a liar on top. That's true for maybe 500 plus stocks. It's not true for the companies we're presenting here. So DRD Gold, I'm showing you the video. There's 3 reasons that we love this story. It's one of the only ones in Africa that we go for, because I am generally buying at the moment in North America and a little bit in South America and Mexico, of course. Number 1, there's no exploration risk. That's one of the big risks in non-producing mines. Number 2, it's socially, environmentally responsible, super responsible, because they're cleaning up so many landfills. And 3, the company's expanding, which are the 3 things I like to look for. So let's see what they have to say.
And we believe it has compelling medium-term organic growth prospects.
Whoa, let's start from the beginning. We agree it has. Okay, let's go.
Hi, my name is Neil Pretorius, and I represent DRD Gold. DRD Gold is a South African-based gold producer and is listed on the Johannesburg Stock Exchange and the New York Stock Exchange with a market cap of approximately $1 billion. We believe that DRD Gold is a producer with a difference, as all of its approximately 160,000 ounces of annual production is from the reprocessing of gold mine waste tailings dams. This means that the company is waste neutral. It does not produce any new waste. Its impact on the environment is the opposite of conventional mining, in that by mining these legacy sites and reclaiming these mine waste dumps, natural ecosystems are restored and land is freed up for sustainable use. We're also very aware of water usage. We reclaim these dumps by way of high-pressure hydro mining, and this requires a lot of water. Through extensive infrastructure investments over the years, we now have access to grey and industrial water adequate to cover more than 90% of our total processed water requirements, and all of this water remains in a closed circuit. Then, in terms of power, a newly constructed 60-megawatt solar power plant, which we own, supplies almost half of our power needs and will reduce our carbon footprint, we believe, by 50% in the years to come. In terms of financial performance, the company, as an unhedged producer that takes full exposure to the spot price of gold, is benefiting from the higher gold price. If you were to look at the presentation that accompanied the release of our results for the 6-month period ending 31 December 2024, you will see that the company produced approximately 80,000 ounces of gold and that it reported a 28% increase in revenues to just north of $200 million. This was on the back of a 26% increase in gold price. Cash operating profit of approximately $81 million, up 74%, and headline earnings of approximately $50 million, up 65%. Our numbers, I remind you, are reported in South African Rand, and these numbers assume a Rand-dollar conversion, which I did for purposes of this video, of roughly 5 cents, US cents per South African Rand. So they might be a little imprecise, and we may just want to double-check those. However, be that as it may, this enabled the company to declare an interim dividend of 30 South African cents, up 50% on its previous dividend, and making this the 18th consecutive financial year of declaring a dividend. So what is next for us? In June of last year, we commenced construction on a capital reinvestment program that's been long in the planning and aimed at increasing volume throughput to establish production capacity of approximately 200,000 ounces per annum, which would be up 40,000 ounces on our current production capacity. This we hope to have in place by financial 2028. Although we have secured a facility of approximately $100 million to fund this program, we have so far been able to fund it from operating cash flows, as a result of which the company is as yet free of bank debt. In conclusion, therefore, our value proposition. DRD Gold is an established dividend-yielding gold producer and is listed in jurisdictions that demand the highest standards of governance. It is unhedged and takes full exposure to the gold price, with a share price that is seemingly steeply geared to movements in the gold price, and we believe it has compelling medium-term organic growth prospects in its Vision 2028. Thank you very much.
Thank you, Neil. Again, if you are interested in socially responsible investing, which I think all the companies we present do today, I mean, that's mostly history, there's none that's better. And so if ESG is important to you and critical, then this should be the first one you buy. We're not going to go into this here. We are going to be doing a separate gold presentation somewhere in the fall, but we've tracked lots of companies and we buy and trade them accordingly and recommend them accordingly. So it's quite a lot. I'm a Leo, so I've naturally fallen in with gold and have been in it for 30 years and sort of love it. So even if I'm selling it, it's only because it's overvalued, and I prefer to buy value. And I was trained as a value investor way in the old days, which means you buy something undervalued, you sell or hedge it, or write calls on it when it's way overvalued. But there are alternate ways to make money in the market, whatever is comfortable for you. Another area which has been very popular are royalties and streaming, because there's far less risk. There's a little bit less upside, but there's far less downside because they don't have any expiration risk and they're only collecting rent checks. So as long as the people are producing, they're making money. There are three that we like. Number one is EMX Royalties, which we've recommended before, and I think it's quite undervalued. Vizsla, which will be, I always pronounce that wrong, Vizsla Royalties, which we'll describe in a moment, and who's a sponsor. And Wheaton, which is just a great company, but it's on hold because of valuation, not because it's not very good. As soon as I wouldn't sell it if I own it, but if I were buying, unless you're very bullish on gold and silver right now, I would wait for a pullback and then own it. So let's discuss Vizsla Royalties, but before I do, this is something very unique to me in the sense it's a royalty company. Usually it's dozens or hundreds of assets, so you're diversifying the risk. Here it's a single asset royalty. There have been two notable examples. One was Great Bear, which was acquired by Royal Gold for $200 million at 1.5 NAV, and Origin, which was acquired by Triple Flag for $343 million at 1.8 NAV. Both were pre-development, just like Pinocchio. So there's precedence for this. And let's take a look at it. It's quite a good story. We just got to it, and we're just getting the valuations down, but they certainly can be a lot higher.
And with Mike Pettengill, I'm the CEO of Vizsla Royalties. Vizsla Royalties is a precious metals focused royalty company with a principal asset being a net smelter return royalty, NSR, on Vizsla Silver's flagship Panuco project located in Mexico. Panuco is a world-class, high-grade silver and gold balance rapidly advancing towards production. In July of 2024, Vizsla Silver published a PEA with impressive economics, highlights being over 15 million ounces of annual production over the first 11 years of mining life. In fact, those first 2 years, you're doing over 20 million ounces. Ultimately, after-tax NPV here being $1.1 billion US dollars with an after-tax IRR of 86%. Most impressively, this was at $26 silver in 1975 gold. This allows for an incredibly rapid payback period of just 9 months on the initial capex of $224 million. Vizsla Royalties offers direct pure play exposure to the Panuco project. Again, this is currently the largest, highest grade undeveloped silver primary resource on the planet. And again, first production rapidly advancing towards it in the second half of 2027. Vizsla Silver recently secured over $100 million US in equity financing, bringing its total cash position to just over $200 million US. This really puts Vizsla Silver in a position of strength to accomplish all its operational objectives, including an ongoing test mine and feasibility, de-risking the project, not only for Vizsla Silver shareholders, but of course, Vizsla Royalties shareholders as well. Now, what Vizsla Royalties holds is that 3.5% NSR royalty on the core mine plan located in the west, and this is covered by the pending feasibility study, as well as a 2% NSR royalty covering all of the surrounding exploration ground. You know, Vizsla Silver published a press release just yesterday on the exploration upside potential in this district. Vizsla Royalties holds an NSR royalty across the entire district in all of those targets that were mentioned in that press release. More importantly, we have no debt at Vizsla Royalties, no capital expenditures, no operating risk, providing that investor with that leveraged exposure to a world-class silver project and its long-term cash flow potential. As mentioned, just yesterday, Vizsla Silver announced its 2025 exploration program for the remainder of the year, really underscoring the scale and upside of the Panuco project. The program includes over 25,000 meters of exploration drilling, an updated airborne electromagnetic survey, really geophysical survey, really forming on the back of the recent HLEM survey with the results published in yesterday's release, as well as advancing mapping in the district to really bring it up to increase coverage. To date, Vizsla has outlined 2.7 million ounces of gold equivalent ounces in the M&I category. That's about 222 million silver equivalent ounces, or 1.7 million ounces of gold equivalent in the inferred classification. And this is why it's exciting, again, because these defined resources just represent a small component, approximately 8% of the known vein potential that exists in the district that Vizsla Silver knows about so far. So with drilling now focused on these most prospective royalty ground claims, every intercept, every successful intercept directly impacts and enhances VROY's long-term cash flow profile. And again, this is so important because it's without any shareholder dilution or added costs. So for shareholders of royalties, this represents that compelling position to benefit directly from any growth in resource that Vizsla Silver is to realize without any further equity dilution or capital outlay from the royalties perspective. So as Vizsla Silver ramps up this drilling on these royalty claims, particularly those 3.5% claims, every successful intercept adds torque to that long-term cash profile. Everyone, thanks for watching. This is the first of many that we're hoping to publish. We'll continue to share updates on Panuco through the lens of Vizsla Royalties as Vizsla Silver continues to advance and de-risk the project toward production. To learn more about Vizsla Royalties or get in touch, please visit our website at vizslaroyalties.com or contact us directly at info@vizslaroyalties.com. Thanks, everyone. Have a great day.
Two ways to play the Vizsla story. Now we're going to give two stories that are highly speculative, but have very good fundamentals behind them. Gold exploration. If you're looking for a 10-bagger, I'm not saying these are going to be 10-baggers, but could be, or even triples, then gold exploration is one of the places you want to look to in a basket, because no one knows which ones will succeed. But in a basket, you generally can succeed to some extent. So we're going to present two companies we like. One we presented before, one we haven't. They're generally very inexpensive, but very promising. And again, this is for the speculative part of your portfolio. If they move along further, they can go, as they go into pre-production, there's less risk, less reward. So we're going to give two. The first one we're just running into, and we think is a very powerful story. It's called Stakeholder Video. So let's take a look at that. And again, this is for speculative capital. That's capital you can afford to lose without impinging on your lifestyle.
So this is Henry Weingarten's presentation. It's the third Monday of August, which is a significant day in the Yukon. Every year on the third Monday of August, they celebrate Klondike Discovery Day. So in 1896, in the Klondike Yukon River, they found, right near Dawson, they found gold in the riverbeds. And there was a gold rush. It was called the Klondike. 1896, 1897, and they were mining gold in the White Gold District, the Klondike, for more than 100 years. So the early part of the 21st century, they've taken almost 20 million ounces of gold out of the Yukon River. But in the early part of the 21st century, in about 2005, 2006, Sean Ryan, originally from Timmins, set out to identify the source of the gold in the Yukon River. And he developed a GQ probe device for sampling soils and moved back from the river bank to sample soils at regular 100-meter intervals and look for traces of gold to identify the deposits that would have been the source of this substantial gold inventory that came from the Yukon River in the form of placer mining since 1896. His first success was the coffee deposit. Ultimately sold to Goldcorp for $520 million through Kaminak in 2016, 520 million Canadian dollars. A total of almost 5 million ounces measured, indicated, and inferred categories. Now, since that time, there's been subsequent discoveries. There was, at that time, 2006, a staking rush. Ooh, eyes coming on me. But anyways, in 2006, there was a staking rush. And the ground in the center of the White Gold District is now in Stakeholder Gold. And we're going to have a major discovery in 2025, in September timeframe. Something that we've done a lot of work on, 3.2-kilometer trend called the Sky Gold Zone. And another, the Loki Copper, actually about 8 kilometers to the southeast. So the company's set up with very tight capital structure, 20 million shares outstanding, cash flow. And the cash flow is designed for us to have funds to conduct exploration and keep our share count very tight, so that when we have this discovery, we'll have a maximum re-rating of our share price, which we now anticipate in the closing months of 2025. We're going to put 1,200 meters of drilling into the Sky Gold Zone, a zone that we know is 3.2 kilometers long, between 20 and 30 meters wide, and dips at 60 degrees. And if the grade is 1.5 grams or greater, we can see, given the dimensions of the structure, that this could be a multi-million ounce gold inventory. And the Loki Copper Zone is a further independent deposit, 8 kilometers to the southeast of that, 2.5 kilometers long, 800 meters wide. We're going to put 2 holes, a total of 400 meters into that target, and anything above 0.3% copper, given those dimensions, will equate to several billions of pounds of copper contained. So there's some very compelling attributes to the property that we've got in a storied mining district, and the closing months of 2025 will be profound for valuation prospects for Stakeholder Gold Corp, SRC in Vancouver, and SKHRF on the Pinks. Thank you.
Oops. Good story. Now, the next one we presented before, Gold Terra, we also think that it's a critical time this fall. The stock's been sort of sitting around there at 4 or 5 cents. We've had them present in New York, a very experienced and successful gold developer. It's pennies on the dollar. And again, you have to hold these things. But it's got some very interesting possibilities, as we'll see. And Gold Terra, as you'll be hearing about, has the infrastructure, has the size, has just about everything you want to have. It's just got to have this, and they're moving in that direction. So, okay. I'm up in the country, so this is a little slower of my birthday week. So I need this immediately. Let's get that one. Why don't you? Let's see what we're getting here. The internet is, there we're going to come up suddenly. Nope, that's not the right one, guys.
It was in DRD Gold. DRD Gold is a South African.
No. We've already had you, so come on.
Stock exchange in New York.
Oh, there it is. Gold. Whoa. Let's see. There we are. There's Jones. That's
Good afternoon, everyone. Gold Terra story. A multi-million ounces potential in Yellowknife, located in Northwest Territory in Canada. Lots of good shareholders. Some top shareholders are listening here on this place, including Ingalls Snyder's, Mackenzie Fund, Eric Sprott, and a lot of insiders, as well as Newmont. Analyst coverage by Paradigm. Why Gold Terra? Less than $10 an ounce in its current valuation, accounting for almost 1.8 million ounces of gold. Busy and exploring in the 6th largest high-grade gold camp in Canada after Timmins, Kirkland Lake, Val-d'Or, and Red Lake. The infrastructures are there, which is very important. Hydropower, airport, a town of 23,000 people, low cost of drilling, especially in the winter when we use the ice, or on the con mine, which we can do all year long. What is very important about the con mine acquisition from Newmont is that it's a permitted mining site, currently in its closing state, that has a surface right and a mining lease with it. With management and execution and track record from building mines before, including Louis Dion, Paul Bonville, and others, including myself, we know that we can move this project forward towards production. So far, of course, 1.8 million ounces was discovered, and we've been focusing on the con mine, which is the blue box on the map that you see below. The potential to 1.2 million ounces can grow in the northern part and could be very easy, accessible satellite deposit to be brought to the con mine site once we have find enough ounces to support building a new mill on the con mine. Yeah. You can see that we control about 50 miles or 70 kilometers of the Campbell Shear. Campbell Shear is your gold plumbing system, a very important system that had yield already 14 million ounces at grade of 16 to 22 grams. Those mines were shut down towards the end of the 2000 era, 2003 for the con mine, when gold was about $340 an ounce, and the cutoff grade at the mine was 10 grams. The Call mine today looks like the site that you see in front of you, the town of Yellowknife to the north. Of course, some infrastructure, very important infrastructure. We account about $150 million US of infrastructure on the mine site that will help restart a mine on the same site once we have reached a minimum requirement of finding enough ounces to start an operation. As you can see, most of that we've done on a long section that you see here outline the 540,000 ounces that we found, the 5 million ounces that was mined at 16 grams, the drilling we intend to do in 2025, the underground drilling that will be part of a future drill program to which we have tested to have found quite a lot of mineralization. And to the north, a lot of different deposits, including, for example, Miss Pickle, where in 2022 we discovered a new zone, 32 grams over 3 meters. It's a satellite zone. It's probably never going to reach 1 million ounces, but it has great potential and a good grade to supplement the operation that we plan to build eventually on the Call mine. Gold Terra, investing in Gold Terra is investing in people, in infrastructures, in location, high-grade gold, with a very good team that has been working on the project for almost 6 years. Thank you very much for your time. I hope that you enjoy looking at the Gold Terra story and future development over 25 and 2026. Thank you.
Okay, that's definitely a good story. Both of them are highly speculative, but I have a feeling come the late fall, one or both may be coming home or moving forward. I just want to point out one thing. When we're dealing with the last company, microcaps, they're basically like long-dated options. So they can go up 2-3 cents, which is like 30-40%, which of course you normally would not handle if you're dealing with a large cap stock. So it's something, you don't bet the whole ranch on it, but if you're hoping for champers, and that's caviar, and champagne, that's one place to put a little bit of speculative capital. Very briefly, we'll have a few other companies, which we're not presenting here, but critical metals, obviously, because there's tremendous emphasis on it. There's American Tungsten. We're going to be presenting them on August 23rd, which is part of our Regulus series. This is a new series we're doing 4 times a year. We're invoking the fixed stars, which Regulus is for great wealth, and I'm doing a short interview for 4 to 5 minutes. It's a little different than what you're used to. Very brief, so you'll get to hear just a few companies in a new way. The other companies, which we presented very often, is the metals company, and the metals company is one that we're looking at. Was up last year 8 times. Obviously, one has to trade it. Now it's coming back a bit, but in the fall, it's definitely something you want to own for a 2-year basis. It's just a question of when. A very good company. They'll be presenting for us in New York in probably in October. So these are some things we're looking at that you might want to check out. Another area is, of course, media and entertainment, which always does well. But if I'm correct, that markets will be seriously worried. Certainly, they'll be part of our 2026 portfolio. As we will be worried about recession, then you want to look at stocks like this, that if the markets stay where they are, they'll go up maybe 20% or 30%. Cinemark, Lionsgate, National Sin Media, Marcus, and Netflix. But if it goes way down, they'll hold their value much better. And remember, during the Depression, stocks that did well were gold and entertainment. There were some others as well, some of the manufacturers, but they did among the best. And I'm not saying we're going into depression, because we're not, but we are going into recession-like or recession environment next year. Whether we hit this fall or not is an open question. So to review, there's 2 types of investment approaches we're recommending as we enter into 2026. Value investing. These are companies that profit in both bull and bear markets, and we're going to give you one. And speculation. So small cap companies that have huge upside potential with obvious risk. And there are other ways you can play the market. This is what I like to play. And you may want to follow part of what we do. The company we're going to be presenting, which is my Warren Buffett value pick, is Acme. Acme is a company that's tremendously benefiting from the onshoring. And if markets do well, they will do well. And if markets do poorly, they will be buying other companies, and then a year or two later, we're doing really well. It's a win-win situation. Extremely well done company. So let me get back to that. It's a company we presented before. It's just a question of when. Let's see if I can catch us. I'm sorry, I'm not doing this the best way. Oh, come on, guys. I think I don't know if we're going to have time to edit this because it is due tonight, but let's see what we've got here. There we are. Come on, guys. Stop here. Come on. Go back. There we are. Where are we? ACU. We are not the best when it comes to audio-visual. And here we are.
Hello, I'm Walter Johnson, Chairman and CEO of Acme United Corporation. We're listed on the New York Stock Exchange, symbol ACU. We're one of the largest suppliers of first aid kits in North America, as well as one of the leading suppliers of cutting tools globally. Our Westcott scissors are the largest in the world. We have a history of driving growth through innovation. Our customer base is a who's who of premier companies, whether those are industrial distributors, retailers, and large OEM accounts. We've got 14 years of consecutive sales growth from ongoing operations. And we have a large recurring revenue component due to refills in our first aid kits. Our EBITDA is about $20 million. Our sales are over $200 million. We've had a history of successful acquisitions. We continue to be looking at them, and we think this is an excellent time, both because we're highly liquid and because there's been substantial pressure from tariffs and the economy on some of our competitors. We believe we're positioned for excellent potential growth in the future, and we're excited to share our story with you. Thank you very much for listening.
This is an excellent story, and will certainly be in our 2026 portfolio, regardless of how the market does up or down. It's a Warren Buffett deep value. If markets stay where they are, we expect maybe 20 to 30% increase. If they drop, it will perhaps stay where they are, and then they'll rally next year. Take a look at it. If you want something conservative that you can just go away and come back in 2 years and say, hey, I'm in good shape, this is one of the companies you would want to look at. And some technology watch. We're going to deal with this a little bit later because these are not the technology like the AI and quantum computers, most of which have already happened, and now they're momentum plays because of valuation, and certainly they were good areas for some investors. These are 5 stocks that are a little higher risk, and you may want to take a look at it. We'll be presenting them at a later date, and each of them have an interesting technology, some more risks than others. So there's 5 stocks you might want to take a look at that are rather interesting. So you can take a look at them, and then we'll continue. We recommend being cat-like. That's one of my 2 charming cats. Excellent hunter. Extremely patient. So we suggest accumulating buy on weakness, whatever your favorite stocks and commodities are. It's an example of our current positioning, which is for mixed markets increasing risk. Gold, as you know, we believe is going to go much lower, but it's been holding 33.80 and 33.50 support. I think we'll see a $3,000 level if I'm correct about the crises being reduced. Silver, we were short. We were debating whether short again at 38, but we've decided not to. So intermediately, we have a lot of gold, silver shorts along Vizsla. There's some others we're going to be adding to it. And again, we trade that up. And if you're interested, you can see this on our Twitter account as well. And basically, these are interesting markets, and traders are having fun, and you either have to take your profit that day, or what we do, take half profits or occasionally losses as traders. Oh, that's the latest version of it. Effectively, many people are warning of a drop. That's this Friday, which is, of course, a trader's diaper day. We're still on yellow alert, so we still may be selling may and go away. Additionally, there's very little cash available historically, and that's very often ahead of sell-offs, because if you don't have cash, how do you buy? Of course, you can do it on margin, but there are problems. So these are some more current numbers. We're also going to be buying some EMX royalty to add, and perhaps some Vizsla royalty too, but not quite yet, but very soon. Again, it depends on what your portfolio is. We believe in managing portfolios more than individual stocks. So that's it. Our philosophy is to use for trading, astrology and technicals, for investing, astrology and fundamentals. This Friday we'll be releasing a video. The first one, which is Regulus, which is potential for wealth. We'll have a couple of companies there. You might want, these will be very short. These will be 15, 20-minute total videos, because like all of you, we're just pressured for time. We want it to be worthwhile. And on Tariff's November 24th, which is embracing change. Then December 21st, our large hour-and-a-half presentation. Thank you very much, and I hope you'll subscribe to our YouTube account at Henry Weingarten to follow us, and we definitely appreciate your being here. So let's close this off. Thank you all, and have a great week.